Good afternoon, everybody. This is Andy Pedraza with Special Effects Academy on our start of the week session for February 3rd of 2019. Take a look at the week that just ended as well as the week that's coming and any fundamentals, analysis, and such that we have in the mix. As usual, we'll go through our regular agenda, the prior week, the currency strength meter, any fundamental announcements scheduled, a look at the major pairs, any setups we see in progress, and a few parting words. Starting off with our historicals, this is the long-term ledger. A few of the trades have closed, some for, some against, not a really major change in the account at this point. But on a positive note, we have seen a turnaround, and most of the trades that were carrying some level of loss in prior weeks, indeed for most of the month of January, which just ended, are now either in significant profit or are heading close to a break even or somewhere in that general area. The only ones that remain slightly negative are the euro dollar and the USD Swiss trades. Curiously enough, trading in opposite directions for the dollar, yet both are moving in a contrarian fashion at this point. So they are serving as a hedge to some of the other trades we have open, so not necessarily a bad thing. And again, they are meant to be long-term trades. So odds are pretty good that one or both of them at some point will come back. The pound trades in particular are doing quite well as the pound goes into negative territory at long last on the back of negative Brexit news and a general negative outlook. The dollar has also taken a bit of a hit this week with a dovish outlook from the Fed in one of their press conferences. And last and certainly not least, the CAD. Oil prices continue to improve, and the CAD has finally started to turn around. And we are in 3 different CAD trades, all of them carrying some or significant level of profit. So things are looking good on the long-term trades as is. Some of these trades, indeed, we've already locked in profit by adjusting the stop loss. For the short-term trades, a slightly negative week. We were down a little bit less than 100 pips on short-term trades, weight adjusted for the size of the account. So there's that. Nothing there out of the ordinary. We were taking the entries as they presented based on the systems we're following. As I always say, we will see some losses when trading. That's unavoidable, but we follow a system and trust it to take us to the finish line in one piece. So we'll continue looking for these entries and applying them when we see them. And let's hope this week is a better one. Notes and opportunities for improvement. As I mentioned, pound weakness has come back with a vengeance, and I also mentioned that weak outlook from the Fed weighing on the dollar right now. Even a really good non-farm payroll this past Friday couldn't undo the damage that the press conference and the dovish outlook gave the dollar on Wednesday. And, well, I already said it, but let's repeat it. The long-term account is starting to get in gear and is looking quite positive right now. Trades remaining open short-term or the week, none. All the open trades are long-term. Let's take a look at our relative strength meter for the last 30 days as well as the last week. In the last 30 days, we continue to see volatility decreasing. It was above 4% last week when we took the measurement. Right now, we're a little bit better than 3.5% as the volatility over the last 30 days. And for the weekly volatility, it is very close to 2%. And we'll take a look at some of the big movers. The Aussie in particular had a pretty good week, gaining ground against everybody except the metals. CAD, as I mentioned, also a pretty good week as oil prices continue to improve. The Swiss had another bad week, losing ground against everybody except the pound. The euro was pretty middle of the pack, won some, lost some. The pound was the big loser, and we've already covered that extensively in my prior words. Brexit, Brexit, Brexit. That's finally came back with a vengeance against the pound. That was the clear loser for the week. The yen was also middle of the pack, won some, lost some. The Kiwi did very well, in particular against the euro, and that is one of our longer running trades. Carrying at this point, collectively, we've taken, I think, more than 600 pips out of the Euro New Zealand this year. And currently, we were carrying about 200 pips of open profit on Friday, with 100 of those pips protected via stop loss. So the Kiwi had a pretty good week against everybody except the Aussie and the CAD, and even against those, the relative movement was very small. It was a much steeper movement where the Kiwi did well against all the other currencies, especially against the pound. Dollar, as I mentioned, a pretty poor week for the dollar as these dovish comments from the Fed weighed in. It only improved over the pound, which had a worse week, and over the Swiss, which a little bit inexplicable what's going on with the Swiss, but it is weakening very, very slightly. It wasn't a big move, but still it's weakening against pretty much everybody else. And that brings us to the metal. The metals were also big winners this week as silver gained ground against everyone except gold, and gold gained ground against everybody else. So gold was the clear outperformer for the week. That's going to be it for our relative strength. Let's move on into the calendar of events for the week. So we've got that RBA, Reserve Bank of Australia, interest rate decision that had been originally scheduled for this week that just ended. Not sure what happened there, but it was double booked. I could see in the calendar even last week that it was scheduled for both days. So obviously didn't happen last week. It is supposed to be happening tomorrow night at 22:30 at 10:30 p.m. Eastern Daylight Time. We will be trading that one live, and as we attempted to do last week, we will be having a late evening session for the trading room as we combine the regular session with the fundamentals. So we'll be combining that and opening up the trading room at 10 p.m. Eastern Time. I will confirm that by email. Wednesday, we have employment change and unemployment rate out of New Zealand. I will not be trading that one live. On Thursday, we have the Bank of England interest rate decision. That's probably going to be a very key event to look at. The last time the board met, they voted unanimously not to change the vote. Not to change the rate, I'm sorry. That makes it very unlikely that there will be a rate change, but if we see some of those votes move over into the cut or hike territories, that will give us a bit of an indication as to what will happen in the following month's interest rate decision out of the Bank of England. And that one will be traded live. It will be on Thursday at 7 a.m. We'll be opening up the trading room 30 minutes earlier, 6:30 a.m. Eastern Time. And last but not least, we have Canada's equivalent of the non-farm payroll coming out on Friday at 8:30 a.m. The unemployment rate, and the net change in employment will also be trading that one live. So that's three fundamentals that we will have scheduled for the week. That one on Friday will be opening up the trading room at 8 a.m. So all of these a half hour before the event, we will be opening up our trading room. And with that, we're going to move into our charts, looking at the daily charts on the euro dollar. The euro dollar, it went in both directions this week, mainly went against the dollar as the Fed comments weighed in on the market. But the last 3 days of trading were essentially very flat. It looks to have topped out and is yet again moving down towards the bottom of the chart. We do have an open trade, a short on this one, and as I mentioned earlier, it is carrying a negative of somewhere in the neighborhood of 100 pips. It's been higher, it's been lower, And right now, as such, it's really a hedge against anything else. And of course, if we do see a market turnaround and we're still in that trade, there's a chance that we'll take profit out of both sides of these bets. Pound dollar. The pound had a very great run for a few weeks, and finally Brexit came home to roost. So we had the first negative week it's had in a while, and it's not looking good. So very likely the pound will continue to weaken this week against all the other currencies, with perhaps the exception being the dollar, which is also facing issues right now. So we'll see what that brings us. We are in a short trade on the pound dollar right now. The most recent trade opened on Friday as it hit the trigger for that entry on that trade, and we'll continue to hold that one. Stop loss is significantly above the prior high, and of course, with the news coming out of Brexit, I really don't expect the pound to gain any significant strength, but we'll see what happens. Either way, that is an open trade. USD/JPY, we're also short on the USD/JPY, and it did go a little bit against on Friday, but not much. We're still pretty much within 50 pips of our entry on the USD/JPY, one of our newer trades as well. And we'll see how that evolves, as the yen tends to be the safe haven currency for the European market in particular. Obviously, on Friday, something went into a retracement on that one. Not sure the whys or the wherefores, but we will keep an eye on it. And either way, long-term trades, got to be patient on these. USD CAD, one of our clear winners for the week, and also a trade we are short in. So the CAD went into overdrive with the improvement in oil prices. It's actually crossed the Ichimoku cloud quite nicely, come out at the bottom, and has not, it doesn't look like it's reached the bottom yet. If we continue to see oil prices gain strength or get higher, we will continue to see this pair drop lower, and I'm in no hurry to close that trade so long as it continues carrying us into profit. Ultimately, I would expect it to find some sort of resting spot near the 128. I'm sorry, I clicked the button and it moved the chart. Here down near the 128 is probably our first area of any significant support that it's going to find on its way down. And even that will already have us with another 300 pips of profit in our pocket. So when it starts getting near that area, I'll start considering what the next steps are going to be, whether we want to take that profit off the table or move the limit and let it continue heading further south. So more to come on that. USD Swiss, our other loser, along with the euro dollar, even though we're trading this in opposite directions to that trade. But still, this one has found significant resistance within the Ichimoku cloud, has really not broken out. That cloud is dropping. And very likely with continued dollar weakness, this one is probably going to be the one coming back to us quicker, as most of our other dollar weakness trades are in profit right now. So we would expect this one to do a reversal early in the week unless something in the situation changes. Next, our Aussie dollar. It has done a breakout on the daily coming out of the Ichimoku cloud bullish. And of course, that is in great part due to the dollar weakness that was injected into the market this week that just ended. I'll take a look at this one as a possible long trade if it does breach the prior high. So I've already got my, I guess, my mental trigger on that price point as the indication that I should pay a little bit more attention to this pair. For now, I would probably stay out of it until it either drops beneath the cloud once more or it breaches that point around the, that's probably going to be around the 73.5 is where that prior high is located. Kiwi dollar, we're not in this trade anymore, but this is another one that if it breaks that prior high, I would probably consider going long on this one. And in both cases, Aussie dollar and Kiwi dollar, that would mean at last a reversal of that bearish trend that lasted the entire year. So I'm waiting for a confirmation of that breakout before I start trading into a Kiwi recovery against the dollar, and same goes for the Aussie. Aussie CAD, this is one of the Canadian pairs that benefited the least from the oil rise in price. It is still trading very sideways, and as such is probably going to give us a really good opportunity for a short all the way back towards the bottom for about 400 pips once it starts getting into gear. So pay close attention to oil prices this week for an indication of when it's time to enter this trade. I've already got a triggered pending order to trigger me into this on a short if it reaches whatever that resistance support, point was in the charts. So keep an eye on that one. Euro Swiss, what can we say about the Euro Swiss? Still trading very sideways. It has broken out bullish from the Ichimoku cloud, but with a lot of indecision along with it. I'm still expecting that Swiss recovery. So if anything, I would expect this one to start trending down at some point, but we'll keep an eye on it. I don't think it's ready to be shorted just yet. Euro pound, and we're already long on this pair after a long hiatus where we didn't trade it. It has bottomed out, and of course this week's bad Brexit news has started to make this pair go back towards the top. It is a very wide sideways channel, and it's got about 250 pips, maybe 350 pips, if it does a full trip back towards the top of the channel. And we're already trading it in that direction, and there is no hurry on that trade. We'll just let it fulfill. Euro JPY has finally broken back into the sideways channel it had previously been in. Not decisively either, so I'm waiting for a better signal on this one before I consider doing a long. But much like the Euro pound, once it is at the bottom of the channel, your risk is going to be the prior low, and the upside of that trade would be the entire width of the channel. So we'll see how that plays out. I would like to see a little bit more confirmation before we enter this trade. Euro CAD, we're already in this one. We're already short, and we're very happy with it. Canadian recovery on the back of the oil price recovery has done very well on this pair, broken through the cloud, and is making its way nicely towards the bottom. This is another trade that I'm in no rush to get out, to see how far it drops and follow it via trailing stop or adjusted manual stop at a safe distance and maximize that profit. Pound JPY, this is one that I've been waiting on to give us a clear entry. It has not done so yet. It's probably one of the few pound pairs that hasn't significantly weakened after last week's news. So keeping a close eye on this one to see how it starts out the week. This is another one that has a very huge opportunity once it starts moving in the expected direction, which again is going to be pound weakness and yen strength as it goes all the way down to about 136, which is a good 700 pips of a drop once it gets into gear. So another one that's high on my radar, but it's just not ready yet. Aussie JPY, another one trying to break back into its sideways channel very indecisively. So much like the Euro JPY, until I see a good movement, I'm in no rush to get into this trade. Euro New Zealand, our clear winner for the year. We've been trading it for a month. We've taken hundreds of pips out of it. It's finally broken out of the bottom of the cloud. It did have a very small retracement on Friday, which is probably going to turn around again as we start off the week. We've given it enough room so that the stop loss should not be a consideration at this point. We're protecting 100 pips, and it should have enough leeway there for it to do its retracements and it's turn around and head back in the expected direction. So my ultimate target is below the prior low as it does a full extension and drop somewhere, I'm going to say, in the neighborhood of the 160s, 160.00. So it's currently about, I'm going to say, 600 pips above that. So that is quite a decent extension if it does pan out, and I'm in no rush to get out of this trade this time around. Pound CAD, another one that's significantly benefited both from the oil price increase, which has strengthened the CAD, as well as the pound problems with Brexit. So this one has moved twice as fast as the others. It is an open trade. We're currently carrying about 200 pips of profit on this one alone, and it's nowhere near where I would think it would end up if the trend continues with oil prices and Brexit at the same time. So this one is going to be a double header, and I am looking for at least a drop to the 166 down here at the bottom of your screens. Pound Swiss, and we do have an open trade carrying a very small amount of loss, or even a break even. I forget this one. But this is another one, much like the pound JPY, that has not benefited from the Brexit news from last week. So at the slightest indication of anything, I think this one is going to make up for that and drop all the quicker, at least to the area of the cloud, which will already put us in some level of profit. If it drops deeper, all the better. So we'll stay tuned to that one. We are in the trade and no rush. And that is the end of our charts analysis for the start of the week. Setups in progress. As I mentioned, I am expecting more weakness out of the dollar. After that, a dovish Fed outlook. And it's all but confirmed that there will be a cancellation of this year's 3 expected interest rate hikes out of the Fed. So that is going to be taken as significant weakness from the dollar, and it's probably going to weigh on our currency for the next month or so at the very least. Euro pairs, weakness still evident in most of them. Pound pairs, no need to repeat or belabor what we already said. It's going to be Brexit, and the bad news is finally caught up to the pound. Where will it bottom is not known at this point, but we will track it as far as we can. Aussie New Zealand, as I've been saying for a couple of weeks, it looks like they're starting to come out of the bearish mood they were in. And we may be looking at the beginning of a reversal on the Aussie-Kiwi pairs. And last and certainly not least, the CAD pairs are doing very nicely as the recovery in oil price boosts the CAD to levels it hadn't seen in months. So let's just hope that that trend continues. We see that OPEC this last week has cut production yet again. There is a lot of unrest in Venezuela, as well as it looks like their current president and dictator is going to be ousted. Could be even today, could be within hours, could be within days, but it looks like his days are numbered. Even though that's a good thing in general and will probably turn into an increase in production of oil, it's going to be a shambles and chaos for at least a few months while everything gets squared away. So I wouldn't expect the Venezuela situation to move the market, to move oil further down to any degree. Quite the opposite. Probably going to add a little bit of uncertainty to the mix. And last but not least, on our weekly open, patience does pay off. We've been carrying a negative balance on open trades for at least the last month. And long term, you have to be used to this. You will be underwater at some point, and often for extended periods. However, if you enter the trades for a reason and there is no compelling evidence to change your reasoning, stay the course. Trust in your analysis, trust in your plan, trust in what you're doing. Otherwise, what's going to happen is you're going to get cold feet. You're going to exit trades when you shouldn't have exited them. And then the market loves to mess with you by having those trades move in the direction you had predicted when you're no longer in them. So don't get caught in the market's game. Stay the course, trust your analysis, and follow your plan. That's the way you make profit long term. And that is it for me today as I go off to watch the Super Bowl, which should be starting in just a few minutes. That is our major sports holiday for the year. That is tonight, Super Bowl Sunday. So I wish everybody a great trading week. We will be back tomorrow at actually not at our scheduled time. Tomorrow we'll be opening up the evening session at 10 p.m. to dovetail with the Aussie interest rate decision. So we'll have both our regular session and that fundamental at 10 p.m. Other than that, does anybody have any comments or questions before we drop off? Okay, then thank you very much. It has been a huge pleasure. This is Andy Pedraz at Special Effects Academy signing out. See you guys tomorrow.